Good evening, everyone, and welcome along to the Property Mentors online network meeting this evening. Apologies that we're running a few minutes late, just had a few technical issues at the start there. So I hope you're all doing well this evening. We have got some really exciting stuff to share with you tonight, and obviously, as always, to answer your questions at the end and make sure that we try and help you as investors progress on your journey. What I want to do is just give you a quick intro to this evening in terms of what we're going to cover. So I'm going to do a quick introduction to myself and to the Property Mentor, and then I will introduce you to Pam, who's on our panel tonight, and also to Patrick, who's going to share with you how to go about chasing your dreams. And I think it's probably fair to say that these Patrick and Nikki, who I've known for some time now, they really do go after their dreams. They really make sure that they make the most of everything that they do, and they really do chase their dreams so that they get them. And if you want to learn how to get your dreams, then Patrick's definitely somebody that you should listen into, which is why we brought him on tonight. Because he's very good at getting what he wants. So I'm hoping, we've already had a few questions in, but I'm hoping we're going to have some more questions in around how you get your dreams and other questions, anything else that you want answered tonight around property investing and anything outside of that in terms of looking to get your goals and dreams as well. We're going to have about an hour that will be on tonight until around 8 o'clock. And then just before we finish off, obviously wrap up and tell you how we can help you. But we're going to make sure that we try and cover as much as possible in a very short space of time. So I'm going to crack on and just do a quick introduction to myself. My name's Susan Alexander. I'm your host for this evening, founder of the Property Mentor. And what we try to do is to help you on your property journey. I've done an awful lot of different things in property and helped hundreds and hundreds of people build their property portfolios and investment journeys and businesses around that. Patrick and Nikki Hopgood are two people that I've supported on their journey. In the early days, I worked with them as a coach, and hopefully they'll sort of verify that I did a good job and helped them get to where they wanted to be at that time, and they are doing fantastic things and continue to do that. So that's a little bit about myself. In terms of the Property Mentor, what we're about and what we're trying to do really is to help you through coaching and mentoring. I coach and mentor hundreds of people on their property investment journey to help them achieve their goals and dreams, and really help you understand how to get there and show you the path and show you the way, teach you how to do things, think outside the box and learn what you need to do, but also help connect you with the right people so that what you're doing is you're building your connections, building your network. I always think that the net worth is really, your net worth is really the size of your network. So if you are not networking and you're not getting to know more and more people, then that's probably why you're not getting more and more wealthy. So get out there and talk to people, come on here and talk, meet as many people as you can, and we'll help you. As part of the Property Mentor, we run local networking meetings as well as these meetings online as well, and provide support and advice to you. And we offer a free coaching call. If you want some support through coaching, you can go to our website, thepropertymentor.com, and book a free coaching call to get some support on your journey. So that's what we do at the Property Mentor. If we can help you, hopefully we'll help you some tonight, and if we can help you more specifically, then do please get in touch. One of our panelists tonight, Pamela O'Brien, somebody that I've used a number of times over the years. Pamela is a conveyancer and is fantastic at supporting her clients and really giving support and advice to the wider property investing audience. And that's one of the many reasons why we invite her to join us on these panels and the Q&A sessions, to help support you on your journey and give you some help and advice. It's very rare that you get solicitors that support you. We've got a couple of really good ones that support us in the Property Mentor and our wider client base. So I'm just going to ask Pamela to unmute herself and just do a quick introduction to say hello and tell you a little bit about her business, and so that you've got questions. If you've got questions later, you know what she can help you with. So Pamela, are you there?
I am. Thank you, Susan.
Excellent.
I'm the managing director of Redbird, and we are a very small firm of licensed conveyancers based in Barry, north of Manchester. We do a lot of work with cash investors on the purchase side, a little tiny bit of work with purchasers who are doing things with a mortgage, although I tend to refer them to somebody who can represent all the panel mortgage lenders. We do a lot of sale work, and we are doing a great deal of lease options at the moment, as well as people try to secure deals. I think there's a sense that the market is rising, and that we're trying to secure deals now for the next couple of years, given the uncertainty with Brexit. I really, really like working with people who are either starting on their journey or trying something new, maybe branching into some new area of property that they haven't really done before. I love helping people out. I'm happy to answer questions. I'm happy to sit down for a cup of coffee. But I am here as a resource, and I like to be thought of as a resource. I'd rather you ask or pop me an email than wander around in the dark not knowing what to do. So think of me as a resource, and I'm happy to be that for you.
Fantastic. That's excellent, Pamela. I definitely think of you as a resource, that's for sure. Hopefully, you know, I can certainly vouch for the fact that you've been very supportive to me and also the wider audience that I've worked with throughout the years, and really just a really good sounding board as well as a great solicitor. So yeah, definitely worth connecting with Pamela to make sure that you get the right support and advice on your property journey. She is very good at lease options, so definitely worth having a conversation there if you are looking at that as a strategy or thinking about that going forward. So we'll come back to Pamela in a bit when she joins us on the Q&A panel. If you've got any questions, I really encourage you to ask questions throughout. If you haven't already located it, I'd like you to locate the chat box and just give us a quick shout out, tell us where you're dialing in from tonight, and just say a quick hello so that I know that you know where the chat box is and the questions box is, so that you can ask as many questions you like. And we're going to stack them up, and we've already had some in, so please do get them in. We'll try and answer as many as possible tonight. And if I can't answer them tonight, then what we tend to do is we will have a little YouTube channel where I try and answer as many of your questions as possible, so we can connect you on the YouTube channel if you like, and just see where your questions, give us your questions and we can answer them there if we don't get them answered tonight. So just moving on, I'd like to introduce Patrick and just say a quick hello to Patrick before I let him loose to go on with his presentation. Patrick and Nikki, his wife, is two people I've known for a few years now. They have done fantastic things in property, started off sourcing properties and have gone on to start building the development side of property investing and doing some really, really amazing things in the property investment world. So I'd like to introduce Patrick and let him do a bigger introduction to himself than I can do, and share his story with you, and hand over to him.
Hi, Susan. Well, thank you very much. That was very kind, and very kind of you, very kind words. So yeah, welcome everybody. I'm pleased to be invited here tonight to talk. So I did a webinar, I think, for Susan around a year ago, so it's nice to be back again, share our journey and share our story. Yeah, if anyone has any questions, I'm happy if you ping them across, and if Susan, you ask me the questions, I'm happy to just go as the talk goes and answer questions halfway through. It's no problem at all. So as Susan said, my name is Patrick Hopgood. I'm the co-founder of Goldworks Capital, which is co-founded with my wife and business partner, Nikki Hopgood. So we are a development company. I'll go to the next slide. Do I do this, Susan, or do I? Okay, perfect. We're a development company, so we concentrate on residential developments to sell. So anything from just house renovations, extensions, we do a lot of those, apartment conversions, and also just starting to get into some new builds. My goal tonight, I love motivating and inspiring people. Now, one of the reasons I love doing that is because when I'm motivating someone, I'm motivating myself as well. And I feel like that whole energy, and we're not in a room here tonight, but even on the webinar, I love being around motivated and positive people. And I feel like the more motivated and positive I am, that comes back to me as well. And then possibly some of you will even go on and work together. Next slide. So just a little bit of a brief background before we get into my property journey. I grew up in Australia, hence the accent, and I always knew I wanted to do something with my life, but I didn't know what I wanted to do. And so I grew up in a small cattle property in Australia, and so I wasn't sure what I wanted to do. And to show you how small it was, if you see the school photo there, there is 30 or around 25 kids there. And that was the entire school from grade 1 to 7, not just my class photo. So that's how small a town I grew up in. And once I finished high school, I went off to university to become a school teacher. Now, I don't know what I was thinking. Sorry if there's any school teachers out there. There's nothing wrong with being a teacher. But for someone who was ambitious and wanted to do something different with their life, I don't know what I was thinking. And 2 years of being a school teacher, I quickly realized this wasn't for me. It's a 4-year degree in Australia, and I did a 4-week practical examination after the 2 years and absolutely hated it, and actually for the first time realized what I was going to be doing. So I quit then and there, and I wasn't sure what I was going to do. So a couple of weeks passed, and I made a decision. I had a friend in America who was training horses, and it was like the racing industry, but it was in a Western sport called reining. And so you'd have wealthy clients, like the racing industry. Wealthy clients would buy you a horse and back you, and you'd go off to shows and try and win money. And there'd be hundreds of thousands of pounds up for grabs, a couple of $1 million at the biggest show. And so you start off small, and you work your way up. And after nearly 10 years, I was starting to do really well. I was living in a really nice house. We were getting nice horses. We were going to shows. And then my visa ran out. And I met Nikki over there, who's British. My visa ran out. So that's when we moved back to the UK. Next slide. And so we moved back, and the reining industry, the horse industry, doesn't exist outside of America. So we didn't know what we were going to do. And if we were going to start again, well, we might as well start in an industry that's limitless. And like everyone else, we thought you needed money to be in property, but we thought, you know what, let's just start looking into it. And we started quickly realizing that you don't need money. You can actually make money without any money. And so when we came back here, we were not mortgageable. Nikki had been in America for about 7 years, so she had no track record. I had no track record. We had no money. By the time we shipped our dog, our horse, flew to Australia for me to get a visa, come back, we literally had maybe £100 and no job. So, but we started learning everything we could. I was trying to do it for free, and I tried to do a JV with somebody, and that didn't work. And what I realized was, without any knowledge, it's really hard. No one will give you any time. And so after we did a 3-day course, which was good. It opened up our eyes to a few different options. And then that's when we met Susan. And Susan was very kind with what she was saying about me, but I also can say a lot. We spent a year with Susan, and we'd made 0 money up to that point. And so Susan helped us get on track. When we met Susan, we were trying to do everything. We were trying to do lease options. We were trying to do joint ventures. We were trying to do HMOs. We were trying to do single lets. We were trying to do, we were trying to source properties. We were trying to do joint ventures. We were trying to buy our own properties. And if you're doing that, I've said this a few times, and it seems to be one of the biggest mistakes that people at the beginning make. If you're running around, or even not at the beginning, we almost did it when we went to developments, but if you're doing that, you're not going to get anywhere, because you don't become an expert at anything, and it's hard to then focus and really find a good deal. So what we ended up doing, and this is Susan really helped us with this, was to focus in on something. And that's when we focused in on sourcing. We realized that there was a lot of clients that were in London looking to buy HMOs but didn't have the time. And we had the time, and we were starting to get a little bit of knowledge, not much, but a little bit, because we've been working with Susan and racing around doing a lot of things, but not doing much. And we ended up sourcing our first deal. And so that was brilliant. All of a sudden, we made £2,500. And 2 weeks later, we sourced our second deal. And that was just from pure focus, just focusing in on, you know, one thing. And then once we sourced our second deal, the first deal was someone local, and they just took the property and did the refurb and furnished it and let it out. The second property was a person from London, and they said, can you project manage the refurb? We were like, absolutely. We had a builder from networking already lined up that someone introduced us to. So we charged 10% on top. So now we made £2,500 plus another £3,000 on top because we project managed the refurb. And then we had to furnish it. So we got a furnishing company to quote, and they were way too expensive. So we quickly said, you know what, we could do this. So we Googled a few furniture items, and then we had a furnishing company. So all of a sudden, we had 3 little businesses in there, and we gave the property out to someone else to do the lettings. But back then, there weren't as many HMO specialists, and we struggled to find someone who was, you know, quite good at the letting side. So after 3 properties, we decided, you know what, £200 per property, they got. If we have 10 properties, that's £2,000 a month. So now we started a letting agency. And it was really good because we had a one-stop shop for our investors in London. But what ended up happening was we ended up working ridiculously hard, and we had to start employing people, which is good, but we had a lot of responsibility, and we weren't actually making that much money. So we employed someone with the furniture, because putting 6 packs of IKEA furniture for every bedroom together quickly grows old. Got someone with the lettings, so that was good, but the lettings is, anyone who's run a letting agency, I know Susan has, there's a lot of work in a letting agency, and that was not my cup of tea. And then also the project managing, we got someone to help with that. And so, but same thing, we realized, you know what, we're doing all this work, we've got a lot of responsibilities and people we're overseeing, and we're only making about £5,000 a deal. Now that sounds okay, but we could use the same amount of time and the same amount of knowledge and skill and step it up and go to bigger deals and make £50,000, £60,000 per deal instead of £5,000. So that's when we decided to get into developments. And we almost made the same mistake when we first got into developments. We just didn't do it for quite as long. We started running around and we were looking at, you know, looking at new builds. We were looking at large apartment conversions. We were looking at commercial to residential. We were looking at just doing houses under PD, planning. We looked at everything, and we weren't getting anywhere. And that was for probably about 3 months. And then we realized, you know what? We need to focus down. And that's what Susan helped us a lot with when we were doing the sourcing, was focus in on what you're trying to get. And once you do that, you actually start to succeed. And I'll give you a couple of examples here. So we all of a sudden started to succeed with the developments. Now, to do developments, you need to be able to do 5 key things. You need to be able to find the development, structure the investment, raise the finance, do the build, and sell the property. Now, I'll talk about finding the development here in a second. I've got a slide for that. But structuring the investment speaks for itself. You know, you've got to structure. So are you going to get the property sourced? How are you going to finance it? Are you going to raise it on an interest rate? We do 2 ways that we finance these properties. So we don't use any of our own money. So 100% of the money is raised through investors and finance. So we will use development finance. You can get that anywhere between 6-7% up to 12%. Now 6-7%, they might give you a 55% to 60% loan to GDV. So GDV is gross development value. So if you're buying a house at $300,000 and time you do it up and sell it, you're going to sell it for $500,000. Your GDV is $500,000. Well, they might give you 55 or 60% of that if they give it to you at 7%, or you can go get a higher value, 65, 70% loan to GDV, and they'll give it to you at 12%. And you just got to do your calculations and figure out which one's best, because we bridge the gap. So if they loan us $300,000, it's going to be a £70,000 refurb plus stamp duty and legals. We might have to raise another $100,000 to bridge the gap. So yeah, depending on what works best. Now, the other option that we do is joint ventures, where we will partner up with someone. So we, on the interest, we might raise the gap, sorry, bridge the gap. So if the development finance gives us 300,000 and we raise 100,000, we'll give those investors 100,000 at 12, 14%, whatever kind of stacks up and depends what security we're giving them. If it's a JV, what we would do is we would get development finance of 300,000, and then the investor would put in 100,000, but they would get no profit and would split the profit at the end, 50-50. So there are a couple of ways of raising finance if you've got no money and you want to use other people's money to do it. We now have started to accumulate some of our own funds, but what we like to do is then buy properties or and rent them out, or a build to rent next year is our goal. But if you want to use some of your funds, you can, but as we all know, you quickly run out. So it's great if you can raise money off investors. So you might just go down more of a more commercial mortgage or a buy-to-let mortgage. If you're going a buy-to-let mortgage, you couldn't do on development finance, but you could get just a more standard mortgage or a bridging loan, which would be, they wouldn't give you 100% of the development costs. So with ours, they'll give us, when they say 65% of the development finance, they might end up giving you, let's say, a £300,000 purchase price. They might give you 250,000, and you then bridge the deposit and a little bit of the refurb, and they'll start back paying you for the refurb. So they start paying you for all of the refurb, which is really good. So there, I'll move on to building contractors. This is really, really important. Oh, I'll just go back one slide, sorry. Building contractors. If you, it's really important to get a good builder. Now, so many times I've had one builder where they went bankrupt on me, and I learned a lot. I didn't lose too much money, but I learned a lot in that situation. And it can so easily happen. This builder had done 5 projects for me. He was doing really, really good. He was probably had the best standard out of all of them, and out of the blue, he went bankrupt. So you need to really understand your builders. I try, and one thing that I've started doing, I've got a friend who is in the development world himself, and he does larger developments like building 20 houses or anything like that. And I will go down. Currently, he's doing 6 apartments and 9 terraced houses. And I try and go down once a week for about half an hour. And I don't want to be on site doing the building, but the more knowledge I have about the building industry, the less likely builders are to take advantage of me. And that's what I've started realizing. So the more knowledge I have, the better off I am. And so what I will concentrate on now is trying to understand more and more about that industry. And then what I'll do with our developments, we've actually teamed up with the builder, and we do joint ventures with the builder. And that gives that builder more incentive to make sure the development comes in cheaper, to make sure that everybody does a good job, because he gets a good profit at the end. Now, when we've put them out to contract, there's nothing wrong with that, but you really need to make sure you've got a good builder, because they can make or break a deal. And then selling...
It's pretty true at most parts of the phases that you go through, isn't it? The more knowledge that you can gain, the better you're going to be at understanding what needs to be done, what doesn't need to be done. And so therefore getting connected with your projects is pretty important at each stage, isn't it? At some point, not necessarily all the time, but certainly to learn.
Yeah, absolutely. And I found that saved me a lot of money. And also, you know quicker when builders are messing you around, and if you don't know it, you need to be teamed up with someone who does, and then really trust them, because in my mind,
the projects, I guess, because you know, if you're doing a smaller project, there's a lot less that can go wrong. But as you get into bigger projects, the building element can really cost you a lot of money.
Absolutely, absolutely. Like when we first started out, we had no building experience. We project managed the refurb for the investor, and it was a £20,000 refurb, and it went really well. There was no hiccups, you know, a couple of small unforeseens, but yeah, when you're talking 100 or 200,000 pounds, there's so much that can go wrong, and so much where the builders can pull the wool over your eyes, that you things you don't see. So I'm all about knowledge, and the more knowledge you get, whether it's how to find the right properties, how to watch the builders, how to sell the properties, the more chances you are of making money. And that's what we're all trying to do. So As far as sales go, there's a couple of different ways to sell. If you're doing apartments, you might do pre-sales. Now, pre-sales are where you will sell the property on, or you can almost do it. Now, you have to be careful, but you can almost do it before you even buy the property. And the way you can do it is you can take a commitment fee off people. So back when we were sourcing HMOs, we would find a property for an investor, and we would say to the investor, right, here's this property, do you want it? They'd send us a commitment fee. Well, you do the same with the apartment. So you have an apartment for $100,000, and you say to this investor, I haven't built it yet, but once I've built it, it's going to be worth $110,000. You can have it now for $100,000. You need to pay me a £5,000 commitment fee. As soon as you've exchanged on the land, or maybe the office building that you're going to convert the apartments, then you can take a deposit. And the deposit might be 10%, so you get £10,000. And then you can use that money. That's money now you don't have to raise. And so pre-selling is a really good idea. The investor gets a good deal because he's made a save at the end of the, it would have cost him $110,000 at the end, and you've got money interest-free. That and a guaranteed sale. If there's a financial crisis or anything happens, you've got a guaranteed sale. Okay, next slide. Okay, now finding developments. I'd say out of everything, this is probably the most important part. Now, I have three key facts for finding developments. View a lot of properties and put in a hell of a lot of offers, and then have as much knowledge as you can. Now, viewing a lot of properties, if you go out and just view 50 properties, then you're probably not going to find a development. But if you view 50 properties with knowledge, so you start to focus in on a certain kind of property, then you're going to get a development. And for example here, there's so many different ways, and this is what we were doing wrong at the start, is we would go view a new build, we'd view an office to resi conversion, we'd view a house that we're extending under PD. So if you said, right, I'm going to just look for all apartments, I'm going to look in areas, all the areas around me where apartments where one bed apartments don't sell very well and 2-bed apartments sell very well. And then I'm going to look for out of all those little areas, I'm going to look for all the 1-bed apartments that are larger and could be 2-bed apartments. So if 2 beds are selling well at 60 meters squared, look for all the apartments that are selling at that are 1 beds that are 60 meters squared. Then find all the dated ones out of those 1 beds, and then go view all those 1 beds. Now, if you view all those 1 beds, there might be 15 properties, and you just go view all of those ones, and then put in an offer on them all, you will find a development. But if you just go view 50 properties of something, you're not going to get a development. So that's what I was talking about when I was saying about focusing down on something. And there's so many different areas that you could focus in on. You know, whether it's apartment conversions, whether it's, you know, apartments with a commercial building underneath, whatever you want to do, focus in on something, and then what will happen is you'll start to get more of an idea of what the refurb costs. You'll get an idea of, you know, why that property didn't work. Maybe there wasn't enough window space in that one you viewed, and then you won't drive out and view the next one and waste your time, because now you're starting to become a specialist with converting 1 beds to 2 beds. And that's what the key is. If the more you can become a specialist in your little niche, and it doesn't actually take that long, that's when you'll start to succeed. Now, and that put in a lot of offers. We have a rule at Goldworks Capital. Every property we view, we have to put an offer in on it. Now, there's a way you've got to do this, because I love working with estate agents. Now, they can be a real pain, but if you can get in with them, we do get some good deals. For example, well, I'll tell you first how we put in the offer. If we view a property, and it might be on at 150. Now, we know we need to get it at 130, but we know if we offer 130, the estate agent, or even 120, the estate agent might be offended. So what we'll do, we'll view the property, and we'll wait for the estate agent to call us. If they don't call you, then you have to call them, but most times they'll call you back the next day. And they'll say, do you like the property? Yeah, we like it a lot. You know, we can make an offer. It's a good offer. It's a cash buy, or if it's a mortgage, say it's a mortgage, but we're definitely going to buy the property. We know it's got problems. It's going to take a lot of work, but we're not going to mess you around. We'll move quick, but my offer's slightly below the asking price. And then don't say anything. Wait for them to say, what is it? and then you can put your offer forward. And you say, well, if I was going to offer, it'd be 120. And they're most likely going to say, oh, there's no way they'll take that. They just turned down 140 this week, you know. And if that's the case, they're not going to take it, so don't push it any further. But sometimes what will happen is they'll say, oh, they won't take that, but I'll put it forward. And then very occasionally they come back and they say, I can't believe it. And we've had it happen twice. I can't believe it. They've accepted your offer. And so it's amazing. It doesn't annoy them. And so you get in with the estate agents, whereas if you just offered 120 straight off the bat, next time a good deal comes around, they don't want to send it to you. And here's a story for you in the way that works. So we had this estate agent call me up, and this is when we were still doing a lot of HMOs, and we're looking for a development, and this property was on the market at 280, and the estate agent called me up and they said, oh, we've got this wicked deal, you know, and they were looking at it as a HMO. You could convert it to 9 bedrooms. So I went in and viewed it, and we could only get 6 bedrooms out of it because it was in Salford, and all the rules and regulations are quite strict with anything over 6 beds. So the estate agent called me. I never thought anything else of it. And the estate agent called me the next day and they said, do you like it? And I said, it's too expensive. I can only get 6 beds out of it. Explained it to him. About 10 minutes later, the owner of this estate agency called me and they said, what do you mean that property's too expensive? And I explained to her and went into my rigmarole about it's a 6 bed and, you know, I can only get 6 rooms out of it. And she goes, it's not too expensive though. I sold the one next door for 370. And then my ears pricked up. And I was like, I know what's happening. This is a semi-detached. You sold the one that's a detached next across the road, you know. And I was like, which property next door? And she goes, they're literally the semi-detached attached to it. I'm like, wow. So, and she sent me over the link for that. That property was better condition, but not perfect. And so it was on at 280. We offered 270. We could have bought it for 280, but we thought, well, we'll put in a lower offer and got it accepted. And the reason we got that one accepted was because that estate agent knew we were a serious buyer, but also that property was in 5 chains, so 5 other people trying to buy properties. And this estate agent had them all, and they just wanted this chain closed off so that none of these properties would fall through. And it took about 5 months because the chain fell through at one stage and we all had to wait. It was a really good buy. So if you can get in with the estate agents, they can bring you some really good deals. So yeah, next slide. Okay, so you need a successful team as well when you're doing developments or any kind of, you know, property investment. But I'm really big on, if people aren't working out, getting rid of them quickly. Now, we've had a few employees now and different people you're working with, and I would say one of the big mistakes I've made is hang on to people for too long. You give people, it's fair enough to give people a chance, but if people aren't making an effort or working to your standard, you're better off just cutting your losses and moving on. Because when you get that good person in, whether it's great solicitors, Susan's absolutely correct, Pam's excellent, you know, you need good solicitors. If they can, you know, make or break something, you know, architects, brokers, the builders we already spoke about, and even estate agents. Don't just put it on with any estate agents, because I bought a lot through estate agents and sold a few through estate agents now, and there is a big difference. Some estate agencies won't even answer the phone when it's ringing. You got to call like 6 times to get through, and other ones, like the one who just sold it to me, they're not only, you know, answering the phone, when I said I didn't want it, they're calling up and still selling it to me and made the sale. So it's like, when you're selling your property, you want to make sure that you're selling it through an estate agent that is going to, you know, make the most of it and sell your property for you. So next slide.
I think it's quite amazing, isn't it, Patrick, that, you know, you think an estate agent in business with a high street store, they would be straight on it and get straight back to you, and they'd organise viewings really promptly and all those kind of things. But that's not the case, really, is it? Sometimes you just have to be tenacious even with the estate agent.
Yeah, absolutely, absolutely. They can be, you know, I don't know why some of them, but some of them are absolutely terrible. Where, as I said, I know one particular one, you literally can't get through. And I always think if a really good deal comes on there, it's good, because I always think no one else will be able to get through either. So surely I can, if I call enough, I can get it. So, and then I wanted to just share with you some of my goals. Now, the reason I want to share my goals is for 2 reasons. One, the more you tell people about your goals, the more likely it's going to happen in my mind. You're putting it out there so that the more you speak about it, the more you think about it, the more you'll find ways to do it. And we've all been there where, you know, for example, I decided when to get into property. I didn't know anyone in property, you know, and all of a sudden when you decide you're going to get into property and then you start talking about it a little bit, all of a sudden, one of the people who does the massive developments I was talking about, I was helping him out with a horse. And so all of a sudden, that opportunity wouldn't have happened if I never spoke about it. So I always speak about my dreams and what I want to achieve, and it's amazing how it happens. Actually, before I go on to this, I'll just say real quick, I forgot to say one part. One thing I always get asked about is how to raise the finance. Now, off investors. So obviously going to the banks is easy, but how do you raise the finance from investors? And I find actually that is not that difficult. Finding the right deal is the hardest thing. But if you find the correct deal, you're halfway there. So if you can find a deal with a good margin, you're halfway there. Then when you're at these webinars, networking events, like Susan spoke about at the TPM, tell everybody. So many people are looking for money, but I never hear them stand up and ask, you know, now we FCA rules and regulations, we've got to be careful what we say, but you can start to ask what you're looking for. And every single person I speak to, I'm letting them know what I do and what I'm looking for. And what will start to happen is people will start to come up to you and say, oh yeah, Patrick, he does developments and he's always looking to raise finance. I know Joe over here, he's got 20,000. I'll introduce him to Patrick. And if you start telling people, that's the biggest thing. Second thing is building a good brand. It doesn't take much effort, but if you can build a good brand, show what you've done, have trustworthiness in the way that you're very honest and open with everybody about what you're doing, what your plan is, all of a sudden you will find that you will be able to raise the finance. Now, one of the biggest reasons people don't invest is because something doesn't seem quite right, they don't quite trust the person, and they don't think they'll get their £20,000 back. But if you feel like you trust that person, you're 100% clear on what the deal is, and you feel comfortable, they'll invest because they want the higher return than the bank. And so that's kind of what we do, is we basically tell everybody what we do. Then when they want to know more details, I'll speak to them, I'll show them everything, very upfront about it all, and then we just let them make their decision. I don't go chasing it. It's either do you want to invest or do you not. And then the ones that don't, I'm not wasting my time with, and the ones that do, then brilliant. We both have a good relationship. So, but moving on to my goals. I want to have a really nice big house again. I love my cars. Susan and I often talk about cars. She's got a very nice Aston Martin. So if anyone doesn't know. So I love my cars. I want to get more into the raining industry again. I want to have more holidays, and I want to have a private jet because why not? But really, it's more, I fly around the world a lot, and I got family all around the world, so I want to be able to visit, you know, everybody and fly them over to me. Next slide. Okay, and another one of our goals, and same thing, the reason I tell this goal, our goal is to make £1 million per month profit. Now, that might be 12 million a year, broken down differently, but that is the goal. One of the reasons I tell this is, firstly, as I said before, the more you tell people, it's amazing how that works. But also, I hear so many people say their goal is £5,000 a month. And there's nothing wrong with £5,000 a month. That's a very, very good goal. But I was very fortunate. When I first went to America, we were in Southern California, and we were in an industry where there was a lot of money. So there was multi-millionaires, there was people flying in private helicopters, nice cars coming in. So all of a sudden, I was around that kind of money. And you know, when you're around someone, sometimes that's doing something, you're like, if they can do that, I could do twice as good. And so I was around that all the time, and these guys were just making a lot of money and, you know, made it seem simple. And so because I've been around that, I genuinely believe it is very possible. And sometimes people haven't been around it and haven't seen it, so they literally don't think it's possible. So if you want to make £5,000 a month, that is brilliant. But don't just choose that because you think that is what is, you know, you can achieve. Because if you put your mind to it and work, you'll be surprised what you can achieve. And to break it down just briefly.
Well, Sorry to interrupt, Patrick. I
No,
think
no,
the other thing that's great that you have such a massive goal, because I always think that, you know, when I talk to a lot of people about what goals they've got, and they set a goal, I mean, to me it's a bit of a round figure. I'd like to see you have 999,000 or something like that.
You're probably right.
If you got 50% of the way there to 5,000, so let's say your goal's 5,000, and you're working on that and working really hard, and you only get 50% of the way there, you know, you may be disappointed because you get 2,500. If you set your goal at 1 million and you only get halfway there, £1 million a month, and you get halfway there and you get £500,000 a month, you might still be disappointed, but you're going to be a lot wealthier disappointed.
Yeah, absolutely. And you know what? When we first, so we got into, I think it was about 2014, we met you, Susan, and it was 2000, so we had a really good year, started to do right, and it was 2015 at some point where, like, we're not going to hit our goal, so our goal is to do it by end of 24, so 2024, and we're like, we're not going to hit our goal if we don't step it up, and that literally made us step it up into developments. Now, we were making all right money, making £5,000 a source deal, you know, and if we didn't have that bigger goal, we easily could have just maybe got comfortable with that, stayed at it, and, you know, not progressed, and then all of a sudden we wouldn't be where we are now. And it was literally that bigger goal. We're like, yeah, we're never going to get it if we don't try and step up, and that's what pushed us, you know, so... But yeah, quickly before I wrap up here, just to show you, so if we can do, basically, if I can go from, my attitude is, if I can go from doing 10, having no money and no properties, doing 10 apartment conversions, I can easily go and do 60 to 100 units, whether it's apartments, house builds, and if I do 80 units at 3 lots, 240 units over 10 years, I would have my £1 million a month. Now, that's a very roughly broken down figure, but it's amazing if you push for something, what can happen. Next slide. So, how can we work together? Well, you probably already know. If we do hands-free investing, high returns, but I like to work with passionate, committed people. I'm always happy to help anyone. If anyone wants to just give me a call and talk about developments or pick my brain on sourcing, I'm more than happy to help. And yeah, that's it for me.
Fantastic, excellent. I think it's really, really good, Patrick. I always get really excited listening to you talking. You're like me, you talk at 1,000,000 miles an hour because you're very passionate and excited about what you do. But I think the key things that came out for me there were really about, you know, if you want to really get your dreams, think big first of all. You know, really think big. Go beyond what you think is possible, and get absolute focus and clarity. I know that's something that I really try to drill into you, and I do that with all of my clients. Really just get that absolute focus, because if you're trying to do 1,000,000 things, then you get very little. If you try and do one thing or two things really, really well, you start to make amazing steps on your journey.
Absolutely right. Yeah, for sure.
And the other bits are really just, you know, what comes across really powerfully is, you know, take massive action and do whatever it takes to get your dreams, because otherwise no one else is going to get them for you. You've got to go out there and get them yourself and really grab a hold of it, because just taking massive action in the sense of like doing a little bit, you really got to do loads. I mean, all that, that sourcing and the properties and stuff that you've viewed, I mean, I know that you guys just go and you view like loads of properties. I mean, I talk to people all the time and they say like, well, I've been to view 5 properties and I can't seem to get a deal. Well, that's no surprise, because that's actually not that many properties.
No,
but,
exactly.
you know, so it's massive action. So thank you very much indeed. We've had some great questions in. If anyone else has some more questions, then please do fire them up, or put them in the question box so that we can fire them off at Patrick and also to Pam. So what I'm going to do is just give you a moment, Patrick, just to catch your breath and just take a minute to maybe get a drink or something if you want to do. I'm just going to ask Pam a quick question that we've had in on commercial side, because obviously part of what you're talking about there is the sort of commercial side of things as well. And as you know, commercial stamp duty, Pam, it differs to residential. And I don't know if you know off the top of your heads what the commercial stamp duty is, but we've had a question in about stamp duty details and buying commercial or buying for development projects. You know, what sort of stamp duty do you pay? Do you pay residential if it's a residential property, or commercial in terms of the stamp duty?
This is a really tricky issue. If you are buying a property that is currently residential use, even if you're kicking the tenants out and turning it into something else that is not necessarily residential, if it could be used as residential at the time of the purchase, HMRC considers it residential and really wants you to pay the residential stamp duty, including the 3% surcharge. You'll hear a theme here very shortly, which is HMRC really wants you to pay the increased stamp duty. If you're buying a property that is currently commercial, that is going to be used in the future for commercial purposes, and it's purely commercial, that is, it's not a shop downstairs and a living space up above, pure commercial, then you're going to pay commercial stamp duty. Commercial stamp duty starts at $150,000. You don't pay stamp duty at all on commercial properties below 150, and it goes up from there in bands. If you have a question about a specific stamp duty amount, you can easily do it on HMRC's portal. You just go through the questions, and where it asks you if it's residential or not residential, you put in not residential, and it will calculate the stamp duty for you. Mixed use is a real minefield at the moment. HMRC is absolutely trying to maximize the duty that it collects. And so we've had a number of different opinions from HMRC over the last couple of months about mixed-use properties. And the trend, I will say, is for them to say a mixed-use property where there is residential use upstairs, even if you are not currently living in it yourself, should be paid at the residential rate. That said, I think that there are some exceptions. I think that particularly smart, creative accountants can probably get you an opinion that makes you a nice, safe carve-out on the developer exceptions or on the multi-property exceptions. But it is something that you need to take a serious look at very early in the transaction to make sure that you are paying appropriate duty and you're not opening yourself up to an HMRC investigation, because they do seem to be on the warpath.
I think you know, what I've sort of seen is that obviously there's a significant difference between the stamp duty that you pay on a residential property and the stamp duty you pay on a commercial, and I think there's some misunderstanding from people that, you know, if they're buying using commercial mortgages, they think that that means that they're buying a commercial property, and that's absolutely not the case necessarily. You know, you can get commercial mortgages for, you know, for residential property, so therefore it, you know, it doesn't necessarily tie the two together. And you're absolutely right, you need to make sure that you understand what kind of stamp duty you're paying. So good idea to speak to people like yourself, and also check it out on HMRC if you want to be really sure. I'd say that, you know, check it out with an accountant, but accountants don't always know the answer to that unless they're property specialists maybe. Would you agree with that, Pam?
I would agree with that. Even accountants who are property specialists, though, may not know the answer, but they can get an opinion from HMRC. It is not that expensive, it is not that time-consuming, and it's real protection. So if you are buying a property where you feel that an exception applies that would get you out of paying the stamp duty, particularly the residential 3% surcharge, which I appreciate is absolutely killer. For some of my clients, it has increased the purchase cost of their investment property by 300%. So I appreciate how killer it is, how it's limiting people in the properties that they are able to purchase. But if you want to be really safe and you're doing something that's on the edge, get your accountant to file a request for an opinion with HMRC. They will issue you a written opinion on very specific questions about stamp duty.
Cool. Excellent. Thank you for that. That's really clarified that. Patrick, I want to come back to you and ask you, we've had a couple of questions in around the sort of commercial to residential side, and obviously that's I guess the side that you've perhaps looked at and been involved in. So what's the most important aspect to be considered prior to a purchase of a commercial property with the intention to convert it to residential? That's the first part of the question. And then the second part is, how long does it take to get planning permission prior to purchase? completion. So there's a bit of a question in there in the sense of whether you'd actually get the planning permission prior to purchase completion or not. But you know, what's your experience with commercial to residential?
First one, commercial to resi, you want to make sure that you can convert it to residential. So if it's an office, it's under permitted development. There's certain rules where if it's a listed building or things where it can be a little bit more difficult. But make sure it's either got planning or you can convert it. If it doesn't have planning, you want to, there's a couple of different options. Now, you can get planning before you buy it, but I would definitely secure the property, whether that's via exchanging. Now, you can exchange on a pound, you know, and exchange subject to planning. But what you'll find is, and I found this a lot, is that sounds really good and there's no risk, but it's really, really hard to find a deal like that because everybody wants to do that. Now, I'm not saying they're not out there, but everybody loves to have that 100% risk-free, you get planning. So there's a few different ways you can get around that. You might go, right, well, I will do £5,000 exchange and I'm prepared to lose it. And sometimes that's enough to get the investor. Now, yes, it is a gamble, but if you actually look up planning applications, 90% of planning goes through. So what you want to do, team up with someone who's got some planning experience, and that's what we did. Our friend who's done the, you know, I was talking about, does 20 new builds and everything, we teamed up with him for our first one, and the planning actually isn't that hard. Now, planning itself, they'll give you a decision in 8 weeks, but you've got to remember you've got your architects. They can be, you know, not as quick as sometimes you want. You've got to get your drawings and then put it in. If you don't get planning, then you go to appeal. So you want to leave a little bit of time. But the biggest thing is team up with someone who's got some knowledge. And then if it's, you know, a simple conversion, look around the local areas, what's getting granted. If you're trying to convert an office building to 6 apartments and there was one just down the road that did it, it really is that simple. The odds are that you're going to get it. As long as it's not a listed building or there's something else in there, you know, that changes it. But there's, you know, that's what we do. We look to see, we're doing it with a house right now. This one's a little bit different, but it's a large detached house. There's about 4 people on the street that have got planning. It works for us under PD. We'd probably make about 20,000, but with the planning, we'll make about 80,000. So it's a really good deal, and we actually bought that. We had to buy it within 4 weeks, and we bought that. We just got started to get the drawings done before we bought it, so we you know, didn't have planning.
So would you automatically go for pre-planning, or would you just go straight for full planning?
No, we were very, we went straight for full planning on that one. We're very confident that we'd get it, so.
Okay. So I guess sort of just a couple of things to add to that from my experience would be, you know, like if you want to try and make sure that you're going to get planning, you kind of alluded to it there. Look at what other people have been doing in the area. See what's being accepted, what's not being accepted. Check out other planning applications. Find out what sort of feedback people have had. You know, you can look up the local planning portal, get some information on what else has happened in your area to see what's succeeded and what hasn't and why. You know, because Patrick's right, a lot of them do succeed, but if you don't get it right, you can actually fail. So there's 2 key things I'd suggest you look for is previous applications and what's worked and what hasn't, and why if it hasn't. And then also who's been successful. So what architects, what planning consultants have been successfully involved in those successful applications, and can you tap into that knowledge and connect with those people, because they're going to know what they're doing, and therefore, you know, puts you ahead of the game, and they'll understand that local authority as well, because they've already had a successful application through. So that should help you. We've had quite a few questions in on the planning element. So hopefully
that's a really good point. That's what we do. We will look up the people who've got planning on that street and then look who did the architect drawings and use that architect because they've already done it. Yeah, it's really good.
Brilliant. So just in terms of, you know, partly back to Pam in terms of the question that's come in around that whole piece about if you're buying a commercial property with a retail unit below it, can that be converted into residential use? So is there any like, this is partly a planning thing, but also I think it's asked really around the stamp duty point that you made around, is it purely commercial, or, you know, and what if you say it's commercial and then you want to change it to residential? What's your thoughts and comments on that, Pam?
I think it's really tricky and dangerous. I have a client who has purchased a number of properties. In fact, that's sort of his business model, to purchase a property that has a commercial unit downstairs and flats up above, and either take the residential area up above and turn it into little offices, or keep it as flats and just reconfigure it to get sort of the maximum that he can out of it. And we had always believed since the 1st of April that was a mixed-use property, and it would be subject to the commercial stamp duty rate. It would not be subject to the residential surcharge. But a webinar that I attended last week indicates exactly the opposite, that HMRC is trying to maximize their recovery, and that they would look at that because the residential area upstairs can be used on the day of purchase as residential property. They would look at that as residential, and they would want to apply the 3% surcharge on it. From a perspective of turning it into something else, yeah, it's really a planning question. But my experience is similar to Patrick's, that most planning applications do go through, and that definitely my client hasn't had as much trouble on the planning side as we're about to have on the stamp duty side.
Okay, cool. So again, back to you, Patrick, in terms of, I think this is maybe a question around a slightly smaller project, but just it's still relevant on bigger projects as well. If you've identified a property with a tenant already in it, you know, in terms of purchasing it, I guess this is partly related to using investor funds and things like that. If you don't have any money yourself, but you want to go about getting that property, how would you go about getting it? So, you know, looking at securing investor funds, and what would you do if you've got a property that you've identified and it's already got a tenant and it's ready to go? How can you go about finding investors that will invest with you?
Okay, and keeping the tenant in it and just having a rental income. Okay, yeah. Okay, first thing is make sure it's a good deal. So many people send out a deal that actually isn't a good deal. So make sure there's enough money in it for the investor. And I've actually got a couple of these myself where they're JVs with someone and we're collecting on a long-term rental income. Secondly, a wise tip is to make sure that when you find the right person, you both have very clear facts about, you know, what your long-term goal is, because sometimes people get into JVs and it gets messy after a couple of years. So make sure you're both very open with what you're after. But the biggest thing is telling everybody what you're looking for and just hone in on that and focus on that. So if you're after JV partners, people say they network a lot, go to 2 to 3 networking events a week if you can. Just literally go like crazy, tell every single person that you are looking for JV partners to buy HMOs, and make sure you find a single let, and you know, tell them about the deal that you've found. If that deal's gone, if you haven't found another one, tell them about the old deal. At least you're telling them about some kind of deal, and just tell every single person, and then eventually you will find one. Now, if you're not getting someone after 2 months, then start asking people why they wouldn't invest in it, and it might be that the deal's not quite right. So tweak the deal, find a better deal. But if you do that, you will find someone.
Absolutely. And again, it's about massive action, isn't it? It's really about, you know, don't be afraid to ask. If you don't ask, you won't get. But organize yourself so that you've got the knowledge and you understand how to structure the deal to make sure that it is a good deal. Make sure that you can present it well and get people on board with you. And just ask, and you'll get people to invest with you, because that's really the ideal sort of scenario, is if you've got money yourself, you get some.
Yeah, I would say, like, that is where someone like yourself, Susan, comes in, because at the start we were trying to do JVs and source and do all this, and if you don't present something correctly, it's really hard for that investor to want to invest, because they might look at 10 people, and if yours is presented not the correct way, like you're not presenting what the ROI is, all the numbers, you haven't broken down all the figures, then they're probably going to go with someone who presents it slightly better, like we all do. So if that's what, Susan, you taught us a lot. You gave us all your charts and, you know, formulas and how to present the deals to investors. You know, we were just sourcing back then, but we've used pretty much the same templates and tweaked it into raising finance.
Cool. So I guess the other element, Patrick, a couple of questions around your sourcing. So
Yep.
somebody said, where does Patrick sell your deals and show show his sourcing deals? So do you have a website, or do people just connect with you and then they can get copies of your deals?
Yeah, so anyone who's interested, the way I used to do it, I don't know if this person is interested or wants to learn how to source, so I'll do both sides. Basically, I did the same thing. I still source occasionally, but not as much anymore. So we would get a business card. So someone might email us, or if we go to networking events, the main one was networking. We'd get business cards. We would literally network, tell every single person we source HMOs. We specialized in HMOs. We source HMOs in the Manchester area. Once we got their business card, we would then follow up asking them what they wanted. But the main thing was we put them on our emailing list. Now, we use MailChimp. It's quite effective.
I think this is somebody more wanting to look at deals that you've got. So,
Okay.
yeah.
So with that, you would be on our list. Then we send a deal out. Now, when the deal comes out to you, if you like it, you would just get in touch. So basically, if you were interested, I think my email was on there, patrick@goldworkscapital.com. If you email me and just say you're interested in HMOs, I can put you on our emailing list, touch base with what you're after, and then we can go from there.
Fantastic. Excellent. Thank you for that. So just a quick question for Pam around, I've just lost the question. So, oh yeah, it was around surveying. So in terms of actually purchasing property, one of the questions that's come in, would you always get a surveyor's report? I know what my thoughts are on that, but from a legal standpoint, do you think it's a good idea to get a surveyor's report?
Not just when you're purchasing, but when you're getting a lease option too. I have had so many lease option buyers come back to me with buyer's regret, having taken over a property and discovering that it needs major repairs. They didn't get a survey because it's just a lease option, right? And they can get one later when they purchase. Big mistake. When you take a lease option, you are responsible for repairing the property. And that means that if something which is 99% broken breaks the day after you take the lease option, it's your problem. I always, always, always think it's a great idea to get a survey. If not a full home buyer survey, if you can't afford it or it just doesn't make sense for the deal, just get your builder friend to walk around with you and make sure that that property is not just structurally sound, but nothing is on the verge of breaking.
Excellent. Yeah, I think it's a really good idea to get the survey. And then a quick question on contracts. So the question is, what contracts to use when dealing between two agents who have properties and the other, the buyers to not lose out on commission? So, or where to find lease option contracts and purchase option contracts? I mean, my view would be come to you, Pam, to get those contracts drawn up. Is that, yes?
Yeah,
so any
absolutely. Agency contracts between two estate agents, I'm not really sure about. We don't tend to do those, and there are actually some really good resources through the letting agency regulator. What's it called?
The National Landlord Association?
Yes, the National, yeah, or the Realtors Association, something like that. They have a very good pack of contracts that you can buy, including one that deals when you're not the sole selling agent, which I think is what the question's talking about. With respect to lease option and purchase lease option contracts, absolutely go to a solicitor, even if it's not me. There are some solicitors who do lease options, although I'm finding fewer and fewer. But there are people out there who will do lease option contracts. Please do not download them from the internet. 9 times out of 10, you are downloading an American lease option contract. It is not valid and it is not enforceable in the UK.
Cool. So I'm just going to come back in a couple of minutes to a couple of final questions. I just want to share with people how we can help. So obviously we offer a free coaching call for anyone that wants some support on your journey. Just go to thepropertymentor.com and fill out a little questionnaire. We can book you in for a free coaching call and help you. There's a few questions that are related more to kind of specific individual help, so please just fill out the form. We'll book in a time and I will either myself or one of my colleagues will be available to help you. If you'd like to come along to one of our TPM meetings, I know Patrick and Nikki also run a meeting in the Stockport area, Warrington and Wigan. Please come along as our guest to the first meeting. Just use the code TPM. You can also connect with us on Facebook and Twitter. We are running a Facebook competition every month. I'll tell you a bit about that in a minute. But we also post out various things every day, just trying to help motivate you, also keep you well informed in the property industry, and just generally keep connected with you. I said earlier about our YouTube channel. So what I try to do is any questions that we don't get answered here and any other questions that I've got coming in during the month, I record little videos and just put them up on our YouTube channel to help everybody on their property journey. So if you've got any questions, ping them into us. I will try and help by answering those questions, and not just help you, but help a wider audience and put it up on our YouTube channel. So we'll put a connection to that on our follow-up email and also to our Facebook and Twitter pages. Our competition this month is afternoon tea. So if you'd like to win an afternoon tea, then please go to the Property Mentor Facebook page, and all you've got to do is like and share the competition on the page, and you can be entered for free into the prize draw, and we do one every month. We're just preparing our 25 Days of Christmas competition, so there'll be 25 prizes we'll be given away for 25 days leading up to Christmas. So definitely keep an eye on that page and make sure that you're connected with it so that you can enter every single day to win one of our prizes. Anyway, just back to a couple of final questions just before we wrap up. Patrick, I've had a few questions around how do you find good plots. So if you want to build something, I'm not sure whether you are finding plots or just properties. I would say for me it's probably fairly similar, but I don't know whether you've got any tips around people finding great plots for development.
Yeah, plots are very difficult. So it depends if you're looking at just for one house. Most of the ones, if you go to Rightmove, the market, and time you run all your numbers in it, there'll be no profit, or if not, you'll be at a loss. So a lot of times we'll do, if it's a plot, direct to the vendors. So we'll do a lot of marketing in that way. We have other people who do the marketing. We don't do any marketing anymore. So direct to vendors is a good way if you're looking for plots, but also a good way is to do what we were talking about before with planning. So if you can get a plot where you secure it with an option and then get the planning on it, that is a very good way where you can make some profit and find deals a lot easier. Whereas I've found in the past, if it's just a single house with a plot of land and you go on Rightmove and go looking, it's every single one is just way overpriced.
Yeah, and I think a couple of tips that I would give you around finding actual plots would be, use Google Maps and have a little look around the wider area just from Google Maps to see where there's opportunity. But equally, get out there and walk in and look around. It's amazing what you can see right there in your area that you don't see when you're driving the car or just going to and from about your business. Get to know your area really well and just really stretch your legs and get out there and walk about and see what's out there. Another quick one, Patrick, is how to assess what costs to consider. So when you're looking at sort of developing a property, refurbing a property, how do you assess what costs you've got to consider?
Yeah, so that just comes down to knowledge, and that's easy to say, but when I was saying about being specific about something, so let's say you're looking at just doing a new build. If you look at one new build, and then you go, okay, I found a deal. You send it out to maybe 3, 4, 5 builders. You'll start to get an idea per square meter what a new build like that will cost. Now, then you can use that as a template going forward, because it depends what you're going to do. If you're going to have a builder who project manages a new build, you could be paying £1,400 or £1,500 a square meter. If you JV with a builder, you could bring those prices down to £1,000 a square meter. An apartment conversion might be £500, or it could be £800, and that could be £800 if it's more of a commercial rundown building, £500 if it's a bit nicer and easier to convert. So if focusing on something, whether it's just doing a new build, if you're building one house or you're building 10 houses, that price will vary a little bit because you can buy in bulk and cheaper. So yeah, focus in on a strategy, get a couple of quotes in on a certain property, and then you'll use that as a template, and that's kind of the best way from what I've found.
Excellent, that's good. And one final question for Pam. is around. Just lost the question, Pam. Sorry.
It's okay.
I was trying to. Gosh, what was it? It was around lease options. Sorry. Oh no, it was joint venture. Sorry, Patrick's talked a lot about joint ventures tonight, and so we've had a few questions around joint venture contracts. And you know, what should they look like? How should we do them? Again, you know, any sort of comments and thoughts around what people should do around joint venture contracts?
I'd say that you always involve an attorney with joint venture contracts, and whether that is a corporate attorney or property attorney, whatever, but always involve an attorney. And the reason that you need to involve attorney is not necessarily to draft the joint venture contract. You may find a really great template that you want to use, and that's okay, but you need to have tax advice before you do the joint venture. Joint ventures almost always will have tax implications, and you need that tax advice before you do before you do the agreement. The agreement itself, you know, it can be as simple or as complex as you want. But I personally think the simpler ones, which really simply outline what the deal is, what the various parties' responsibilities are, and what happens at the end, are the best. It doesn't need to be a 45-page JV agreement. It just needs to tell the parties what they're doing, what they've agreed. And as long as it memorializes that, it's probably fine. But get that tax advice first, because so many people come to me and say, oh, I didn't realize that this was going to have this tax implication. So really get that tax advice first.
Okay, excellent. That's fantastic. Thank you very much indeed. I'd like to say thank you for all the questions. I know that we've got some that we just haven't got through tonight. Thank you to Pam and to Patrick for giving such great tips, great advice, and Patrick for your absolute inspiration and motivation. Thank you very much indeed. Thank you for joining us on our network meeting tonight and for asking all those questions. If you do have some additional questions, please let us know what they are, and I will do everything I can to make sure that I answer those questions on our YouTube channel. Thank you very much indeed, and I look forward to you joining us on a future one, and good night for this evening.
Thank you very much.
Thank you.
Thanks so much.